All right, so in our last video, we talked about how to earn money, and now we're going to move on to part 2 of our PFL content, how to spend. And remember, there are 4 parts, so how to earn, how to spend, how to pay, and how to save. Okay? All right, here we go. All right, so as the philosopher Mick Jagger once said, you can't always get what you want, and that's entirely true. All right, so I'm gonna put this situation at you. All right, think fast. It's payday. You've got $2,500 in the bank after taxes. So this $2,500 is what you have to spend. All right, make a list of what you will spend it on in order of importance. So when you number out your list, make sure the number one thing that you're paying is the most important thing for you. So if that's rent, pay the rent. If that's utilities, pay the utilities. Okay? So number what you think you're going to have to spend it on. If you were an adult and you had to live for a month, what are you going to spend all your cash on? And you can pause and go ahead and write that down. All right, so now that we made our list of things to spend your money on, all right, now we're going to talk about what monthly expenses actually are, and we'll see if your list compares to this list. All right, so where does this check that you deposited actually go? I know this is y'all, this little meme right here about check your bank account. I'm guessing I should probably have $200 left, $3.62. Okay, you probably made that face sometime in your life when you checked your bank account on your phone. All right, so here is our comprehensive list of things that you need to spend money on per month. All right, some of these things, the amount stays the same, and some of these things it's different. All right, so you've got rent and mortgage, utilities, cable phone, car payment, retirement, medicine, insurance, gas, child support, child care, and savings. All right, so what do we prioritize? What has a little wiggle room in the budget and what does not? Okay, so first we're going to talk about the difference between rent and mortgage. All right, oh man, I didn't define it. Okay, rent is when you're paying money to use a facility. All right, so you're paying to use. All right, and a mortgage, you're paying to own. All right, so when you rent a house or an apartment, you do not own that apartment. Your name is not on the title to that building. All right, you don't own it. You are basically borrowing it from someone else for an extended period of time. All right, so rent you pay to use, and mortgage you pay to own. So a mortgage, if you buy a house, all right, you have to pay a mortgage and pay off that amount of the house that you're buying every month. And when you finish all of your payments and you have paid the loan that you got from the bank all the way back plus your interest, all right, then you own that home. That's rent versus mortgage. All right, so here is a child support check from Dina Lohan. All right, this is for Lindsay Lohan's younger siblings from New York. All right, and this is a $9,500 child support check. Don't be that person, okay? All right, so we're going to talk about 2 types of costs, fixed and variable. Okay, so when you have your expenses, like I said, some amounts stay the same and some amounts change. All right, so a fixed cost is the same every month. All right, make sure you're writing this out on your note sheet and you're writing out your examples underneath in the box. Okay, so fixed costs, your rent or your mortgage on your house, your car payment is the same every month, and your phone payment is the same every month. All right. Netflix is also a fixed cost if you want to think about it that way. It gets auto-drafted out of your account. $8.99 comes out. You watch your shows, you binge if you have to, all as well. Okay. Now, the only reason that a phone bill is going to change is if you go over your data plan. And you know that if you do, the first text that comes in is from Verizon or whatever cellular carrier you have, and it's going to say, you have used 90% of your data for this month. The immediate next text is from mom, get off the Wi-Fi, or get on the Wi-Fi, get off your data, all right? So fixed cost is the same every month. So rent, car, Netflix, phone, things that are not going to change. Things that can be auto-drafted out of your account and you know exactly how much it is. Okay, a variable cost, if you talk about a variable in math, and I don't really like math, but this is a good example, a variable can change, right? You can have more than one answer. A variable is different. It varies or changes from month to month. All right, so like clothing, you might not buy the same amount of clothes in December as you buy in summer, right? You might buy a winter coat, and coats are expensive, and then in the summer you might buy some bathing suits. They're not quite as expensive as a winter coat. All right, your utilities are different from month to month. This past winter, when we had so much ice and snow, people's utilities were much higher than they were anticipating because they had to turn their heat up so high. All right, in the summer, when it gets cold and you have to run the AC, you might not be spending as much money unless you're one of those people who likes your house like a freezer, okay? And groceries, all right? You might not spend the same amount of groceries every month because you might go on vacation and spend a little more. You might decide to cook at home every day and spend a little less, all right? So variable costs, they vary from month to month. Okay, all right, now let's talk about budgeting. How are we going to organize all of these costs into an organized list in a system that we can adhere to every month? All right, so your financial priorities are in order, and now that we've got our priorities, we know what we're going to spend first and what we're going to spend second. All right, it's time to make a budget. All right, there are two components to a budget. There are two sides of a balanced budget. These are the two sides of a balanced budget. Okay, I'm being very blatant about this for a reason, and you probably know what it is. All right, so one side is revenue and one side is expenditures. Revenue is the money that you make, all right, what's coming into your paycheck, and expenditures is the money that you spend, all right? So revenue is the check that's coming into your account, all right, and expenditures is what you're spending money on. These are your bills, okay, and all the extra stuff that you spend money on during the month, okay? Those are the two sides. All right, let's go back for just a second. All right, and make sure that we see that revenue, we've got our little math sign here, is greater than your expenditures. If you want a balanced budget, you cannot wind up in debt every month, all right? So you have to make sure that you are making more than you are spending, okay? So that there's at least some kind of positive number in your bank account at the end of every month. So a balanced budget means that you make more than you spend, or your revenue is greater than your expenditures. All right, and there are two types of revenue, okay? Personal income, which we talked about on that pay stub, which is the total amount of money earned. So if you think back to the pay stub we talked about in the last video, that individual was earning $580 that month. That's their personal income. However, we know that you must pay taxes or the IRS is coming after you for everything that you got, okay? That is your disposable personal income. So after you pay your taxes, then that person had like $480 something to spend at the end, or $450 to spend on their bills, okay? Personal income is the total amount that you get, so either your salary or your wage. So my salary is about $35,000. That's my personal income. But I don't have 35 grand to spend on all of my expenses, all right? My disposable personal income is the amount of money I have after my taxes are all paid, okay? So my paycheck is not going to look the same as my personal income. All right, so speaking of taxes, how much do you pay? Well, that depends. It depends on how much you make. So if you make a lot of money, you're going to pay more tax. If you make less money, you spend less in taxes, all right? So your income per year is split up into what's called brackets or sections, okay? And they look like this, all right? These are as updated as I could find on the websites, all right? So if you're, as a single individual, if you make between $9,500 and $38,700, you're going to pay 12%. These are federal taxes. 12%, I think. Maybe state. I don't know. All right, 12% state tax. Now, if you make $1 over that, you move up into the next bracket. So all these little lines here are tax brackets. All right, and then you move up to 22%. Okay, so please notice if you're married, that means that your combined income in your household cannot exceed $165,000 if you want to keep on paying 22% tax, okay? So this depends. So the more money you make, the more taxes you pay, in theory, all right? Now, you might be able to get a tax break, but it just depends. All right, so a little side note, we call this a progressive tax rate in the U.S. So the more you make, the more you pay. We call this a progressive tax in the United States. All right, so let's go back to our pay stub real quick. So when we talk about taxes, here's federal and here's state. All right, and you also have to pay Medicare and Social Security because you are an individual who is a citizen of the United States. And Medicare and Social Security are what are called payroll taxes. Okay, so we'll talk about that in a second. So you got 4 types of taxes that you pay. You pay federal, which we obviously know goes to the federal government. You pay state taxes. You pay local taxes. And then you pay payroll taxes. All right, so that's Social Security and Medicare. All right, so Social Security, we'll start with Medicare and go left to right. This is the government's medical program that is designed to care for the elderly. Medicare is for the elderly. This is basically just insurance for old people. All right, Social Security is along the same lines. It's the government's retirement / their disability program. You pay into this now and you receive the benefits later. Okay, so you probably heard of people who are older and retired. They're like, well, I get my Social Security check next month. Yes, you do, on top of whatever retirement you have saved for yourself. Okay, so you pay into the United States Social Security plan, and eventually you receive the benefits of this and you receive a check. So the money that you are paying now is going to go to people who are on Social Security right now, so people who are old. And then later on, your kids and your grandkids are going to be paying in, and you receive the money that they're paying in. So it's kind of a cycle. All right, so paying taxes. I think this is our last slide. All right, if your paycheck is direct deposit, means that you don't have to deposit a check into the bank. All right, it just comes directly to your account, and you wake up in the morning, and all of a sudden, there's money in your account. All right, if it goes straight into your bank account instead of you getting a check, your taxes are automatically taken out. Okay, you fill out what's called a W-4 form so that your employer knows how much to take out. Okay. And we know when we talk about collecting taxes, the IRS is in charge of this. They're called the Internal Revenue Service. So if you forget about revenue, either personal or disposable personal income, all right, the Internal Revenue Service is there to take all of your taxes so that they can turn your personal income into disposable personal income, all right, because you've got to pay those taxes first. All right, your employer needs to know if you want to defer some of your tax payments, aka you pay later when you file your taxes in January. Or what you can do is fill out a W-4 form. You have to do this anyway if you have a job, so that your employer knows how much you want to pay now and how much you want to pay later. You need to pay all of your taxes now, right? So if you're a single individual, make sure that the whole thing on your W-4 form says 0. And we'll talk about some W-4 forms later on in this unit. All right, so that has been how to spend money.